You know, companies have their own way of talking, but it's not with words, right? They speak this universal language that tells the whole story. Their big wins, their tough losses. And that language? It's accounting. But hey, it's not just for the number crunchers. Today we're going to get you fluent.
So how do businesses actually speak? Well, they communicate pretty much everything. How healthy they are, what they're struggling with, their biggest successes, all through their financial information. And if you really want to understand what's going on, you've got to speak their language.
And you know, the best way to learn any new language is to just jump in and start using it. So we're going to do just that. Let's follow the story of Sarah, who's starting her very own graphic design business. We're going to see step by step how accounting helps her build this thing from the ground up. Come on, let's dive in.
All right, first things first, what exactly is this language of business we're talking about? Let's get a really clear definition down.
Okay, so at its heart, accounting is really just a system. Think of it as a process for keeping track of, well, everything. You're recording what happens, you're summarizing it all, and then you're reporting that information so that people like Sarah, can make really smart decisions.
Now, every language needs grammar, right? Some kind of rules to give it structure. Well, in accounting, the grammar is this really beautiful, surprisingly simple formula. It's called the accounting equation.
And here it is. Assets equals liabilities plus equity. Now, this isn't just some random formula you have to memorize. It's like a fundamental truth of business. It basically says that everything a business owns, all its assets, had to come from somewhere. It was either paid for by borrowing money, which are the liabilities, or with the owner's own cash, which is the equity. And the absolute number one rule? This thing always has to balance, no exceptions.
Okay, let's see this thing in action with Sarah's new venture. So, she's starting out by investing $20,000 of her own savings. That's her equity, her stake in the game. Then, she goes to the bank and gets a $10,000 business loan. That's a liability, because it's something the business now owes. So, this breaks down exactly where that first bit of cash came from. You've got her personal investment, the $20,000, and the bank loan, the $10,000. They combine to give the business its very first asset, a nice round $30,000 in cash.
And would you look at that? It balances perfectly. The $30,000 in assets that the business now has is perfectly equal to the $10,000 in liabilities it owes, plus the $20,000 in equity she put in. Seriously, this simple equation is going to be the bedrock for her entire financial story.
Okay, so Sarah's all set up, she's got cash in the bank, but now the real work begins, right? She's got to start buying stuff, selling her design services, paying bills. So the big question is, how does she record all of this activity and still keep that crucial equation perfectly in balance?
Well, the answer is this incredibly elegant system that was actually developed way back in the 15th century. It's called double entry bookkeeping. And the core idea is so simple, but so powerful. Every single transaction has two sides. For everything a business gets, it has to give something up.
Now, the system uses two words that, let's be honest, cause a lot of confusion: debit and credit. So, first things first, forget everything you think you know from your bank statement. In the world of accounting, these words are way simpler. Debit just means left side, and credit just means right side. That's it. Think of them like directions. Put this on the left, put that on the right.
Let's put this into practice. So Sarah buys a powerful new computer for her design work. It costs $8,000 and she pays with cash. Okay, so two things happened here. One, the business received an asset, the computer. We'll call that equipment. So we make an entry on the left side, a debit, to increase equipment. Two, the business gave away another asset, cash. So we make an entry on the right side, a credit, to decrease cash. See? One asset goes up, another asset goes down.
But here's the really crucial part. The total amount of her assets hasn't actually changed. It's still $30,000. The business just traded one type of asset, cash, for another type, equipment. So the equation is still perfectly balanced. It's an amazing system, really. It's designed to force everything to stay accurate with every single transaction.
All right, let's fast forward a bit. After a month of grinding it out, Sarah really needs to know how she's doing. You know, did she actually make a profit? What's her business even worth now? It's time for her to pull up her business's first report card.
And this report card basically comes in three key parts, and each one answers a really important question. First, you've got the income statement. This answers, is my business profitable? Then there's the balance sheet, which answers, what is my business worth, like right now today? And finally, the statement of cash flows answers the big one. Where did all my cash go?
And what's so cool is that these three statements all work together. They take all those individual debits and credits and turn them into a clear, understandable story. This is the magic of accounting, right? It transforms all that raw data into powerful insights that Sarah can actually use to make decisions and guide her business.
Okay, so we've seen how this all works for Sarah and her new business. But now let's zoom out a little. Why does being fluent in this language matter for, well, for everyone?
Because pretty much everyone in the business world depends on it. You've got investors who are poring over these reports trying to decide if a company is a good bet. You have banks looking to see if a company can actually pay back a loan. You've got managers inside the company using them to plan their next move. Heck, even the government needs them to make sure everyone's paying their fair share of taxes.
And really, here's the most important takeaway of all. This stuff isn't just for CEOs and accountants. Understanding these basic ideas, assets, liabilities, income, expenses, it literally empowers you. It helps you understand the world around you so much better and lets you make smarter financial decisions in your own life too.
So the next time you see a company's big earnings report in the news, or even just look at your own loan statement, you'll have the basic tools to understand the language that's being spoken. You can start to see the story behind the numbers. The only question left is, what stories are you going to uncover?